Well, let's take a look at the markets now, and we start with Kenya on the east of the continent. And looking at the NSE index, the NSE 20 index was up 0.12% to 4469, and the Kenya Commercial Bank, KCB, was one of the big risers there, up 6.1% to 39.25 shillings. And that's because they're expecting strong earnings, the investors, for 2012. And earlier, the share hit an all-time high of 39.5 shillings. And then Kenyan, the power producer, was up 7.4%, and we'll talk to our market analyst in a moment about those and other companies. And then the shilling, a 5-week high against the dollar. Low demand said to be there for the dollars ahead of the presidential election, which of course is due this weekend. Well, let's cross now to Kenya for our market update in Nairobi. And joining us is Ted Macharia, who is investment analyst at AIB Capital. Ted, let's perhaps begin with a couple of those shares that moved a lot yesterday. Kenya Commercial Bank, KCB, up 6.1%. And Kenyan, the power producer, 7.4% to 1160. Also on expectations of good growth in the first half for them and on the back of new power plants being commissioned.
Yes, David, good morning. KCB is expected to release its end-year results tomorrow morning. We're expecting something in the range of Kenya shillings 13 billion, which is what has been spurring strong demand on the counter. We've seen it peak at 39.50, it closed at 39.25. Kenyan is also releasing interim half-one results, 2013 tomorrow. The demand has been growing. It closed at something around 0.8 million shares with no supply at the close of trade. We are very optimistic about the counter, but this small price rally is as a direct result of those earnings expectations. We know the company needs somewhere in the range of $15 billion US up to 2020 to realize its objective of turning the country's power to green technology, to green energy, that will make about 70% of our energy demands.
Right, and then
so overall,
carry on.
Optimistic. It's overall it's a brief price rally, but we expect, because the elections are in the way and the results are tomorrow, the price rally will be very short.
Well, let's talk about those elections in a moment, because they are really close now and people have been talking about them for a long time, and whether the market has discounted any possible disruption as a result of them. But a couple of other shares, BAT, bogged down by selling pressure yesterday, fell 1.32%, and the foreign investors' stake in CFC has hit the maximum limit. So that is a distortion of the market, but of interest there. It's hit the maximum limit set by the regulator.
Yeah, BAT is set to release its results on Friday. They had already posted a 21% jump by half one. So investors remain optimistic about strong earnings, although it has been coming under selling pressure in the past few days. As pertains CFC, it is the general trend in the insurance industry. We have been seeing parent companies come in and take strong control. South African company Sanlam has increased its ownership in Pan-African Insurance. Liberty Insurance has increased its holdings in CFC Insurance Kenya, which is now trading as Liberty Insurance. It is just a reflection of the growth opportunities that investors are seeing and that parent companies are seeing in the insurance sector. We've also seen these insurance companies look at the real estate sector as a new growth route.
What kind of distortion to the market does that maximum holding have? Because obviously, if once there's a ceiling on it, foreign investors like Standard can't get more of the share.
Well, CMA had said that the status quo will remain on the companies where the shareholding was above 75% before the rule was made. But they've now said that going forward, ownership should remain at 75%, which is basically to protect the minority shareholders in the companies.
Well, let's move on to that election, and I see a report that some businesses in Kisumu, which is Kenya's third largest city, have reduced their stock or closed ahead of the presidential elections, fearing tribal violence, fearing disruption of some kind, but certainly not an expression of confidence in that election.
Well, the disruptive nature of the elections is expected, but I think there are a lot of factors at play. We will start looking at the budgetary implications of a runoff, which might see the whole month focus being on the elections. But generally, we are all optimistic because of the increased government spending that we'll see once devolution kicks in at the end of the elections. I think that is the greatest motivator on the other side of the elections. That well, irrespective of the outcome, we will see increased spending and devolution that will see county regions grow.
Well, that optimism is good, and most commentators have been optimistic about the elections, and presumably if they do go all well, then there will be an upsurge in optimism and possibly the market will react there. Another story that I picked up this morning is that potential investors in oil and gas in Kenya are holding back. Well, perhaps that's part of a bigger caution about the election, but there are big discoveries in Africa generally of oil and gas, so this is a very important sector.
Yes, it is. Apart from the election and its disruptive nature, I think also the framework is still a problem because we are still trying to establish rules and regulation of operations. The government is looking to increase its revenues, so it will be seeing mining, oil and gas as a very good source of strong taxes. So we are still trying to figure out how we are going to make sure that the economic benefits of mining will trickle down to the economy. So I think that is part of the reason that there is a small delay in investments in oil and gas.